All right, so we're moving to Silver X Mining Corp. They trade in Toronto as AGX and in Frankfurt as, if you're looking at a normal ticker symbol in Frankfurt, AGX as well. They are a $56 million market cap company, and they call themselves Peru's next high-growth silver producer. And I hope Sebastian Wahl will, their VP of Corporate Development, will explain to me what that actually means. So, Sebastian, please take it away.
Pass those through, please. Thank you. I'm free to take one. All right. So thanks for the introduction. I'll appreciate that. One thing that has changed a little bit since we actually submitted the presentation and applied for the conference is that we actually left Peru and expanded our portfolio outside of Peru. So rather than being a Peruvian-based or a Latin American-based growth company, we are now active in the Americas, but more to that later. So very quickly, I'm one of the co-founders of the company together with our CEO, Jose Garcia. And one of the reasons I'm here is because I'm a German speaker, so if any one of you wants to come to speak to me later, either in English and German, I'm happy to see you. When we started the company, we had the vision to build a producing company. We always liked a component of cash flow, being able to actually, every dollar that you invoice, you don't have to raise. So we had a focus on wanting to build a producer. I lived 12 years in Peru, so it was obvious we looked there. Peru being one of the largest silver producers in the world was a great environment to do so. Around 2018, 2019, we put a portfolio together of several assets. We bought assets from Pan American Silver, Buenaventura, and we started our journey with a fully permanent mill, and around that, we consolidated a district. That district consolidation then further led to a resource of over 200 million ounces silver equivalent, an extremely fertile ground for exploration success right in front of our door, and at the moment, a production of 2 million ounces on an annual basis. We only started last year, but we're well on track to produce 2 million ounces this year. Further to that, we just published in February a PEA, an economic study, that will take our production from currently 2 million ounces to 6 million ounces. So much for the organic growth. And last but not least, we identified an investment opportunity in the United States in the form of Uray Silver Mines, the Revenue Virginia's mine, which we, in the process of acquiring, a transaction that will be hopefully closed within the next few days, potentially adding another 4 million ounces of production to our portfolio not far down the road. So very quickly, the overview, as I mentioned, we're now in Peru as well as in Colorado. One of the things that is important is that we deliver on the things that we said we will. Over the past few years, we have managed to deliver on our exploration success, putting together a successful or a strong resource, delivering on the M&A promise that we made, putting this into production. All of this, by the way, happened within less than 3-4 years and with less than $20 million, by the way. So going forward, I think you can expect that we continue to deliver on what we say we will. Ideally, putting a production company in the range of 10 million ounces on an annual production. Very quickly about Peru. Peru is one of the largest silver producers in the world, as well as gold, lead, zinc. So it's an extremely good place to be. With and mining being a substantial component to the economy in Peru, we also found ourselves in a fairly sophisticated legal environment to operate. As mentioned before, we are fully permitted, so for us it is more about growth rather than actually getting something permanent, putting in production. Here is an overview on our district. In everything that you see everything that you hear about production comes from our Tangana mine up in the north. In the south, we have the Plata project. In the center of the district, as mentioned before, is about 20,000 hectares, to put this in perspective. In the center, we have our processing facility with a daily capacity of about 750 tons per day. We just published, as mentioned, the PEA. The PEA, conceptually speaking, things about opening a new mill next to the mine gate of Tangana with 1,500 tons a day, freeing the capacity of our existing plant, allowing us to activate Plata. So between those two mills and our resources, we would be producing 1,500 tons a day in Tangana and 1,000 tons at our existing Recuperado plant, which is about an equivalent of about 6 million ounces per year. Very quickly, as mentioned, last year we started production, so it was just a half a year, but already within Q3 we were EBITDA positive with a small net profit as well. We are cash flow positive at this point in time, and for 2023 we are on a good way to produce the 2 million ounces. Quickly highlighting the PEA. With the PEA, we actually added roughly 4 million tons of resources to our mineral inventory, which is about a 12-year mine life. We do have an NPV of the project of approximately $200 million US. That's with an 8% discount rate, which equals to an IRR of about 40%. The capex for that, on the conservative side, I want to say $60 million. Those numbers obviously come from consultants, and it includes, by the way, a $10 million contingency. You'll find in the booklet that you have the details on the PEA. I'll skip those. Here you find an overview of the Tangana district. Those veins in the Tangana vein, they're outcropping for over 10 kilometers, and it's a multi-vein deposit. So very interesting. As mentioned, the plant will be put right next to the mine gate. And here is a overview of our resources. As mentioned, we have about 200 million ounces silver equivalent. We're putting more and more every year into measured and indicated, and we have substantial inferred resources we can fairly inexpensively upgrade to measured and indicated as well. Now that's an overview of the Tangana vein with 3-4 of our major veins. At the moment we're only operating on one, but moving forward we will include the others. I think what's interesting to see is that we can enter from the lowest point in the valley, mine upwards. It's fairly efficient, cost efficient. And if you look at the long section of the very same vein, you'll see we're just operating at this very gray part to your left side. All the colorful dots on surface, they're samples. So the entire vein is outcropping over 10 kilometers. The drill holes below our feet confirm the grades. It's a subvertical vein, so very easy to mine. Very straightforward. The similar vein here, Cauca, if you remember the other picture, there was a yellow one, which is right parallel to it. We were just connected with a tunnel to our existing, basically preparing for our growth scenario. All of the activities we're doing right now are done organically, by the way. This is an overview of our district. Unfortunately, I can't move the arrows, but everything that is blue is part of the PEA, and everything that is outside is still upside potential. So there's plenty of, everything that's red are obviously veins, so there's plenty of more potential to grow the resources and have production in the future. I certainly will not see the end of this mine, that's for sure. And what you see in the yellow circle, I was speaking about the fertile exploration ground that we have. In the yellow circle, we have a gold disseminated deposit on surface. We put about 5-6 drill holes so far, and we have mineralization around a gram and a half from 80 to 150 meters. So there's potential for a standalone gold project in the future as well. We will continue to drill that. It's very close to our existing operation, and it's something that we're actually very excited about. That is for our operation in Peru, which was obviously what the company was built on. And just recently, a few weeks ago, we signed a deal with the receiver in the United States to buy the Revenue Virginius mine in Ouray, Colorado. Some of you might have heard of that asset. For those of you who do not know, the asset is an extremely high-grade silver mine with grades between 20 and 30 ounces per ton. Fairly narrow veins. But the beautiful thing about this is we're purchasing this asset out of receivership. for as little as $3.5 or $4.5 million, depending on which payment option we choose. The asset comes with a fully permitted plant. So again, our focus is on a turnkey project that is fully permitted. So just perhaps here are a few pictures of the plant. The asset comes with a ready-to-go plant. It was literally put in receivership when the project was finished. If you want to know why, it is the creditors ran out of patience with the operator, put this in receivership, and well, sometimes you have to be a bit lucky in life. Everything, I think, over the last two ownerships, more than $80 million were spent on that asset, and it is ready to go. So the infrastructure is built, railway underground is built, galleries are ready. The mill is in spectacular shape, was hardly used. I think they produced for 1 month before it was put in receivership. So it's a wonderful opportunity for us. The potential, that asset has a historic feasibility study. It is from 2022. It is historic because it doesn't belong to us. But if you look at the numbers, that asset can potentially produce roughly 4 million ounces a year. So between what we can do in Peru, getting from 2 to 6 million ounces and adding those 4 million, we're on a very good path forward to become a 10 million ounce producer over the next few years. The challenge of this asset are its veins. So there's a lot of similarities to our Peruvian asset, narrow vein, subvertical, underground, silver and polymetallic. So a lot of, the experience that we have in Peru, we can very well implement to that asset. Before we start operating and making a mistake as previous owners, our focus will be on exploration. So we were going to spend a year and a half drilling this out, understanding the resource better. For a reason we don't understand, the previous owner decided to start mining an inferred resource, and that didn't go very well. It does come with a reserve statement as well, but our focus right now is to basically make sure that we understand all of those veins. In the past, only one of those veins was actually considered. We do believe there's plenty more veins that are actually extremely interesting. We're also looking to acquire further ground around the mine, again, consolidation, with a turnkey project. From here, I want to move on and basically just summarize that we are a small company. Our market cap is, again, 60 million Canadian at this point in time. But we do have our assets in the exploration stage. We have development assets, and we are in production. And our goal is, by 2027, 2028, to actually produce in the neighborhood of 10 million ounces. We believe that 10 million ounces puts us in the next category of valuation and how people look at companies. So that's our clear goal. And we do own all of the asset to execute on that strategy. I'm going to skip this here. There's obviously plenty of catalysts that we have in our pipeline. As I just said, we delivered on most of them in the past. But I quickly wanted to give a word on ESG and our social responsibility towards the communities, towards our workers. We're trying to, even though we're a small company, we're going to come up with a sustainability report very soon. We're working hand in hand with the community, which means we use, as you heard before from my colleague, we're using local companies. About 65% of the workforce come from the village around. So there's a giving and taking. So and it's a mining district in which mining has been done for over 400 years. Very quickly, the 3 largest shareholders control about 30%, of which 2 are still in the active management, which is Jose Garcia, the CEO, and myself. We control 20% of the company between the 2 of us. Our largest investor is Baker Steel out of London. They own about 13%, represented through Franz and Johnston on the board. Our capital structure, we have roughly 157 million shares outstanding, about 8 million warrants and 8 million options, which are mainly with management. They're not in the money. Our largest shareholders are Baker Steel, US Global, Earth Resources, US Sprott. So the usual suspects, I want to say, and we have a little bit of analyst coverage as well. So if you want to learn more about the company, feel free to download that. There's a few slides on valuation, but I think, you can take your own conclusions. We have about a half a minute left, and I want to leave this open if there are any questions.
I had a question. Kind of like the previous one, we heard from a company that's focused on Mexico. Your bread and butter, at least for the time being, is Peru. What can you tell me about the political situation in Peru, which also has not been too easy recently?
It is correct. I mean, I think one important takeaway for an investor or for any management team that is in this industry is communities are there forever. Federal governments come and go. And it is indeed correct that Peru experienced some political unrest. The president went through an impeachment process, and he was a president of the, I want to say, simple people. He was a teacher from a small village in the Andes, and many people who associated with him demonstrated. And it was, I lived 12 years in Peru. Jose and I are both there, we're hands-on. I don't think it is as dramatic as perhaps some foreign press reports on it. And after a few weeks of protests on the street, it was quiet and we're back to normal. As the law suggests, the vice president took over, became president, as a lady at this point in time. And now we're waiting for new elections. So nothing, and again, for us personally, we are in a mining district up on 4,500 meters. There's no agriculture, there's no tourism. There has been mining for 400 years, and we don't expect that to change.
All right. Thank you, Sebastian.
Thank you very much. Have a nice day.